Hey guys, my Roth IRA is exactly 1 year old. So far, I've deposited about $4 on average every single day since I've started this Roth IRA. Check it out. I started it May 23rd, 2024. So when I click the 1 year and the all time, the charts look exactly the same. So I'm going to be sharing with you my entire Roth IRA. And I just bought a brand new stock for the first time ever. I've never previously owned this stock before. So I'm going to be sharing with you what new stock I just bought. I think it's really cool. But mainly this video is about my Roth IRA. Now check this out right here. It's pretty bad. If I should have way more deposited in my Roth IRA. I have 23,000 in my main taxable account right here. But here's what's so cool about the Roth IRA. It's a tax-free retirement account. And when I own these like non-qualified dividend paying stocks, these dividends are still tax-free. Like check this out. This is my main holding in here. This is Main Street Capital. This is actually a monthly paying dividend stock, and they pay about a 5.5% dividend yield. So no matter what, assuming they don't cut the dividend, and the dividend's very safe in my opinion, I'll show you that in a second, but I should get 5.5% tax-free for the rest of my life just from this stock's dividends. You also get the stock price appreciation. I'm up 3.81%, so not too shabby. I don't expect this company to outperform the S&P 500 in the long run, but I like this one to generate income. And the next one, that's a BDC right here. They're one of the companies that have to pay out most of their income in the form of a dividend by law. And another company that's taxed just like that, where they have to pay out all their payouts or all their income in the form of a dividend, is Brixmor Property Group. This is a REIT right here, a real estate investment trust. They do a bunch of triple net leases for grocery stores. So their main customers are Publix, Kroger, Ross Dress for Less. TJX is actually their main tenant, which their stock is on fire. But anyway, this one, let me check the dividend yield. You get a 4.4% dividend yield with this company, which I think is pretty fair. You get 1% of your money back every year. And also, I like the stock price appreciation. Again, these REITs, they really need interest rates to go lower for them to really start to take off. But yeah, that's Brixmor. And we also have right here Innodata. This is a high growth company right here, growth stock. I just started my position in them. I got 9 shares of them at $33. I'm up 20% on them, which is pretty cool. So I want to share with you why I like this company right here in my Roth IRA. So I have 2 super high dividend yielding stocks, but then I wanted to kind of balance it out with a high growth company, one that I have a small little bet in that I hope will outperform the S&P 500 in the long run. This is a small cap, and I want to quickly share with you why I like this company so much. I'll be quick about this. So here's Innodata right here, and they're a software AI company. Their main customers are literally NVIDIA, Google, Amazon, Meta, and Microsoft. They're all customers of this stock right here, and the main reason I like them is because of the growth. I really look for companies that are growing like crazy, and check this out. Their digital data solutions grew 157% from the previous year. I mean, that is incredible growth. Same with the agility revenue down here, but this is a much smaller segment of their business. It's up 11% year over year. That's only 9% of the revenue, but I love the growth of their digital data solutions. And check this out. They're profitable. They're making net income in all 3 of the most recent quarters. And that was real. You can see from the operating profit, they're profitable every quarter. Free cash flow is very strong as well. And they have no net debt. Their assets keep growing. Their liabilities are shrinking. So their asset to liability ratio went from 57% to 39% right now. So Innodata, this is one I really like as a software AI name that I hope will kind of outperform the market in the long run. I also want to talk a little more about Main Street Capital. I want to show you how safe their dividend actually is. So if you look in the middle of my screen, they have a 5.3% dividend yield. The PE ratio is really cheap as well, but you don't really look at the PE ratio for these companies. But check this out. They pay you 25 cents every month. So if you quarterlize that, they pay out 75 cents to you. Well, let's see how much they make in net income per share every quarter. They pay out 75 cents per share. Let's see how much they make per share. It costs 75 cents. Well, check this out. It's easily covered because they make over $1 of EPS every quarter. And check this out. Last quarter, they made $2. The payout ratio from that quarter was less than 50%. The payout ratio was 50%. So they retained a lot of earnings that quarter. And so guess what they did? Since they have so much extra money, they frequently do these special dividends. Check that out. If you look at the top there, special 30-cent dividend. There's another one right there, another special 30-cent dividend, another 30-cent dividend down here. So with this company, you really have a higher dividend yield than what's stated because of their frequent special dividends. And these aren't like unsustainable special dividends. They can actually afford these special dividends. So that's what's so cool about Main Street Capital. I'm kind of buying them close to all-time highs, but I don't mind. I think think they'll just slowly keep on going up. And I'm really buying them for the dividend. I don't mind buying them at all-time highs. The yield is still crazy, 5.5% dividend yield. But now let me introduce you to the brand new stock that I bought for the first time yesterday. I've never previously owned this stock before, so this is a new position for me. And by the way, if you made it this far in the video, please drop a like for me. It'd really help me out. And also, I'm not an expert. I'm just a college student. None of this is financial advice, but you've probably heard of this company before. The new stock I bought was T-Mobile, and I want to share with you something that's so impressive about this company. You know, most of you have probably heard of this stock before, but I want to share with you something that blew me away. And check this out. The PE ratio is pretty fair, the valuation. They're trading at a 21 forward PE, and you get a yield. You know, they just started paying a dividend. You get a 1.5% qualified dividend with this company. But let me share with you the most impressive part. You know, they also had that Super Bowl commercial. They partnered with Starlink. But check this out right here. Look at the revenue. You know, nothing too impressive about this. The revenue grew 6.5%. But what's so impressive is the net income growth. The net income grew 24% year over year. That's insane. That means they're growing their net margins. Check this out. They now have, you know, a 15% net margin nearly. If we zoom out to like 2021, you know, they were in a single digit net margin. So it's really this net margin expansion that's so impressive with T-Mobile. T-Mobile actually now has access to AT&T's bands for free for lifetime after they lost a law. AT&T lost a lawsuit against T-Mobile. And also look at this right here. The operating cash flow is at a record right now, up 34%. So the revenue's up 6.5%, but the operating cash flow, basically the free cash flow, is up 34% year over year. And what's so impressive about the operating cash flow is this is the money that includes the negative interest debt payments. So they have a little bit of debt. 153 billion in liabilities. This is the number that they make after they pay all the interest on that debt. So it was 6.85 billion in the most recent quarter. Remember, the net income was 3 billion, but look how much the dividend cost. The dividend only cost $1 billion. And since they have so much leftover money, you guessed it, guess what they're doing with the leftover money? A ton of stock buybacks. You know, they could easily afford to pay off the debt. You know, they could pay off, you know, billions of debt every quarter, but instead they don't have to. They don't need to. The interest under control. So they're just buying back their own stock like crazy. Literally last quarter, they nearly spent $5 billion just in that one quarter buying back their own stock. So if we go to the total common shares outstanding, that's actually nuts. You own 3.39% more of the company than you did a year ago. So look, there's 1.14 billion shares. You know, 2020, there must have been a stock split or dilution or something. It was 1.25 billion, and you know now it's 1.1. So this is a company that's committed to returning money to the shareholder via dividends and stock buybacks. So that's what I think is so cool about T-Mobile. How much cash do they still have on hand? Let me go check that out. So, after all the buybacks and stuff, yeah, look at that. They still have 12. That's a record amount of cash. Look at that. After all the buybacks and dividends, they still have $12 billion of cash right now, cash and short-term equivalents. The short-term equivalents, what these companies normally do is they own like these 1 to 3 week treasury bonds and earn some interest on it to kind of offset the negative interest that they have. But yeah, that's why I bought T-Mobile. You know, they're kind of a commodity, a utility now. Everyone needs their phone service, but it's a shared oligopoly with Verizon and AT&T, and they just released Mint Mobile. They have the Starlink partnership. So I think T-Mobile is such an innovative company, and they don't have a ton of debt and a ton of a super high dividend payout ratio. So they're not restricted, like kind of like Verizon is a little bit. They have a lot of debt and their payout ratio is so high. How are they going to be able to pay off all that debt with such low retained earnings? I think T-Mobile's in a great spot, and I think this one should just keep on climbing higher. I love the buybacks. I love the dividend growth, and that's why I decided to start a position in them. Let me know what you think about that one in the comments. I bought them here in my growth portfolio, which has for sure underperformed the market. So again, not financial advice here. Look at us since all time, since we've opened this account, we're only up 4%. You know, the S&P is like does that in half a year. So let me know any honest thoughts that you have in the comments. I know I need to be depositing more to my Roth IRA. I especially love Robinhood because of the match program. So far in 2025, I only deposited $648. But since Robinhood's so cool, they have a 3% match where they've actually matched me $19. And if I max out my Roth IRA, that pretty much pays for itself. It costs $5 a month to get the 3% match, but it kind of pays for itself if I max out my Roth IRA. So yeah, that's the video. Let me know what you think in the comments. I hope you have a great rest of your day. My name's Nathan Robert. Please check out the video up here. I think you'll like it.